This is a Women's Day special, and I have with me two power women. Like we said, Manisha Girotra, CEO, Moelis India, and Renuka Ramnath, Chairperson of IVCA, so she represents so many more, and of course, Founder, Managing Director, CEO of Multiples Alternate Asset Management. Manisha and Renuka would be invited to CNBC-TV18 and to the most powerful boards anyways, not just because they are women, but today is partly about how few women are still able to get to the position that they have gotten in. A mutual fund survey of Morningstar says 10% are fund managers in the Indian MF industry. I read some global surveys where just 2% are getting on to the most powerful finance positions, much less in other entrepreneurial positions. So, Renuka, Manisha, thank you very much. This is a very important conversation, and it should only partly be about women. But, Renuka, to you first. When you pitch to companies and you're giving them money, is it that, it is, you have to work harder than the male competition? And if it is so, then what should change? Oh, Renuka, we just have to get back to you in a minute. We're trying to up the audio. We'll come back to you in 1 minute. But meanwhile, Manisha, a similar question to you, actually. There are a lot of CEOs listening to you, policymakers. What should CEOs do differently? What rules need to be rewritten?
Thanks, Lata. I think you said a very relevant point. The answer is in your question. What do CEOs need to do differently? I think governments are doing a lot in terms of policies. We've seen Beti Bachao, Beti Padhao. We've seen the JAM trilogy where, accounts are being opened in the name of women. So you're really empowering women with financial inclusion. But I think what we need is a mindset change with the CEOs. The old boys club needs to be broken, and the biggest champion of that needs to be the man. When you hear Renuka, you'll hear Renuka talking about the fact that she heads a PE as a woman is very inspiring for other PEs, right? So you need more women-led organizations, but more importantly, I feel you need more men who basically are the champions for women, who break out of the boys' club, the mindset that only like-minded people can come to the top. You need a man, you need someone who understands, who can STEM, who's an engineer, middle class. All of the boxes that he has himself ticked are the ones that he sees as recipe for success. The CEO needs to break that mindset and say, look, I'm going to be the champion of the woman. She may think differently, but that's exactly what we need for the organization. We need more diversity, and we need to get these women at the top, because when these women come on top as role models, more and more women will come through the funnel.
Okay. Renuka, now if you can hear me. My point was that you are in the best of positions, but do you have to work that much more than the male competition? And therefore, again, like I asked Manisha, what has to change? Who has to change?
So one great thing that has happened, Lata, is that we have started measuring diversity now as part of the ESG initiatives. Today, anybody who is deploying capital, I would say even in the capital markets, mine is a private business, and of course, we measure it. But even in capital markets, there is a requirement to report, what are the ESG initiatives. And under the S, the gender diversity is a very, very important agenda. So one, I would say that we have to make these disclosures absolutely mandatory, and institutions like IAS, investors like us, board members have to challenge those CEOs, as Manisha said, as to why there is no diversity, right? I've had exceptional leaders. I mean, Lina was once talking to my entire portfolio company saying, if I don't see more than 50% women candidates, I reject the entire interviewing process. So many good organizations are taking many, many interesting initiatives. So first, I would say measure, report, and make the board and the CEO accountable for diversity. But Lata, equally, I would say that women have to take charge of their lives. They have to tell themselves that it is okay, it is absolutely necessary for me to live the life of my dreams. And everything else around me will work in favor of delivering to my professional and personal goals.
Oh, absolutely. Take your point entirely, and I wish I'd heard this advice earlier in my own life. You make a very good point that what is not measured does not exist. So the fact that it is getting measured, it will come into the limelight and perhaps get resolved. Manisha, just one more. I know I've got two bright professionals here from the finance sector, and the financial sector is in a very interesting situation. So I'm going to shift to editorial. But Manisha, just one last thing. Which exact rule would you want rewritten? More flexi hours, more work from home? What options should change for a woman to stay on during just those difficult years? I mean, if someone handholds us up to, the 5 years when there are children to manage, I think we can, conquer the world. But it's those 5 years which I feel I needed help. You think those rules need to change?
So Radha, I think it's not any one. I think it's a combination. And I think the pandemic has taught us that it is, flexi hours, working from home is not necessarily a bad thing. And Radha, unlike your and my generation, millennials and Gen Z today are looking for good organizations with strong cultures. They're not just looking for the next increment or the next pay. So to retain the best of talent, you need to have a combination of these points that you mentioned, such as flexi hours, work from home, longer paternity leaves, maternity leaves, must be seen as an organization which is equal. So give the men paternity leave, time off during optional time off during the menstrual time of the month. So I think a combination of policies which show that you are actually serious about retaining women and about treating women as equal to men will lead to better outcomes.
Okay. Yeah, fair enough. Actually, in terms of maternity leave, I wish those 6 months that is now being given, I didn't get. I got only 12 weeks. And I think, Manisha, you got less. I wish they allow you the option to take it over the next 2 years, because you don't often need the 6 months immediately. The child doesn't even move at that time. You would prefer when they start crowding that you have more options. But yes, we'll have another discussion on this. For the moment, let me drag you back to the editorial. Renuka, money's become tight. Powell's latest statement indicates not just, higher for longer, but perhaps at a faster clip. I was just looking at the Fed watch of CME. About 68% are rooting for a 50 bips hike in the next meeting itself. So is this going to impact the flow of money? If yes, how?
Oh, definitely, Lata. It will impact the flow of money. It has made money more expensive. So I would say that in 2021, it looked like money will just come, whether you have a good, bad, or an indifferent idea. And today, money has become very dear. It will go to more worthy enterprises, people who have more respect for capital. And it also brings enormous financial discipline in all enterprises. And as far as lending organizations are concerned, it will bring acute focus to collections and not just growth.
Fair point. I guess exits will be tough, but I'll come back on that. Manisha, what trends are you noticing in M&A or even for that matter in PE preferences in India? Any sectoral preferences? What trends?
Sure, Lata. I think two trends that have become dominant in India. One, as I've said before, the fact that domestic M&A has become a key driving force is very welcome, right? In an economy which is aiming to be $5 trillion, $7.5 trillion, you need an active domestic sector. And you've been seeing that, whether it's the large HDFC bank trade or Adani bringing back the wholesale assets. That's good. That's a good outcome. I think last 5-10 years with the whole bankruptcy process, the Indian corporate sector became very quiet. So that's a positive trend. And I think you'll continue to see that as valuations get more attractive. Second, as you said, private equity is a very large dominant force in India. In the good years of 21, which Renuka mentioned, you saw about $75 billion of capital coming in. That private equity today also has about $1 trillion of capital lying around globally. But that's not being deployed because leverage became expensive and scarce. And second, just given what's happening in the world globally, people decided that they need to wait and watch. I think come second half of this year, as a lot of these uncertainties are getting factored in, you'll see private equity come back in and deploying larger checks. You've been seeing them deploying smaller checks in the last few months. But I think you go back to the traditional sectors that they deployed in, which is IT services, pharma. These are the two sectors which I think will take a large part of the capital coming in from the private equity industrials, etc., should see some flows coming in from private equity. Infrastructure is the biggest positive that I'm seeing now, Lata, where you're seeing the sovereign wealth funds and the pension funds coming in size and scale in renewables, roads, ports, which is a very positive outcome because that's patient capital. And as you know, infrastructure needs that kind of patient capital. They don't need capital that churns every 3 to 4 years. So that's been a really big positive. Yesterday, you saw CPP taking a controlling stake in Renew. So all of that are really positive outcomes and shows that India has alternate pools of capital than just the traditional sources.
Oh, wow, this is music, actually, to my ears, that even infra is getting, otherwise it just looked like it was more of IT, consumer durables. Renuka, there is serious amount of even domestic wealth available, family offices wealth, wealthy Indians. How should rules be rewritten to ensure that this is harnessed?
Yeah. So, I'm a very big advocate, Lata, for the stability of the alternate asset management business, that Indian money has to reasonably bolster and cushion international money. Just depending on foreign money is not a very happy place to be. And within India, I'm seeing a very, very strong flow of capital coming from family offices and rich individuals. Especially when I contrast it with institutional capital from India. I would say that institutional capital from India needs a lot of push, whether through regulations or debate at the board as to why that should not flow to this alternate asset class industry. But family offices' money is coming in with a lot of confidence, a lot of understanding. And the most important change that has happened in the economy is private wealth managers, companies who distribute this product to the wealth managers, have built tremendous amount of confidence in the potential of the product and the capability of the managers. So this is a very, very big change for good that is happening in India.
Okay. Oh, that's very positive because, Manisha's also spoken about how global money is coming. But Manisha, global money, we were expecting a lot because of this China factor, China +1 factor. Are you seeing a lot of that kind of conversation happening?
So, Lata, I think public markets continue to get capital. I think where the money really dried up is in the VC market and to some extent paused in the private equity market. I think, as you said, we were expecting at the beginning of the year that we would get disproportionate funds inflow compared to the other economies. But look, the other countries like China, etc., are looking very cheap. So, if you're an investor, you're sort of saying that do I de-risk and basically put some capital into India and maybe some into China, Europe? So those conversations are happening, and that's not a bad conversation. I don't think we can have a world where there's just capital flowing into India. We're an economy integrated with the world. We need the world to do well. So, money flowing into China, Europe, back to US is not a bad outcome. But I think I still believe India will continue to attract a disproportionate amount of capital, just given the demographic trends, the deglobalization, the China +1, the kind of push we are doing to manufacturing with Make in India, PLI, etc. So I think we will continue to attract disproportionate capital. Quarter on quarter, yes, we are seeing sort of volatility and instability both in India and the world. So we do tend to get a little jittery. But I think for the long term, we have no reason to worry. Medium to long term, investors globally really like India and want to put capital to work.
Okay. Well, actually, you're speaking of demographics, and I'm trying to squeeze one last question. Renuka, while we think that demographics, who will not want 500 million of a market, 700 million of a market? Look at this, what the corporates are telling us, rural slowdown, urban consumption slowing down. Is that a near-term worry that consumption is not picking up as much as we thought?
Yeah. So, Lata, fortunately, I don't worry so much on a quarter-on-quarter. But what one can say with confidence is that today, with the digital penetration and innovation that is happening around products and services, we are able to create appropriate products for different stratas of India, right? Whether I think about financial products like insurance or credit products, or you think about fashion, or you think about packaged foods, right? Across the spectrum, innovation, digital penetration supported by solid infrastructure, whether it is around logistics or around payment mechanism, has blown up the size of addressable market of India. Today, the TAM for literally any business can be created in a very innovative way if you have an entrepreneur thinking right about the affordability in the TAM segment and how to price that product and offer appropriate products. So while, last quarter, current quarter may be challenging because of inflation, because of higher interest rate, in the longer term, the fact that India will add another 50 to 60 million households who will get into the affordability bracket of more than 10 lakh household income in the next 3 to 5 years is a very, very big market. And the entrepreneurship that we have seen, particularly in the last 5-6 years, are going to go out and grab that market.
Okay. Well, that's a very encouraging conversation, both that investors are coming in droves, both domestic and global, and that they're coming even into structures like infrastructure, and that the market itself is expanding exponentially. And I'm getting it from two power women. Pleasure to hear both of you. Thank you very much for joining us in our Women's Day special and an investment special, I would say. Wrap up on Bazaar. Chartbusters up next.